This is the Definitely Uncertain podcast, brought to you by Goldrock Capital. Each week, we look at how high net worth families can improve their lives, decisions, and investments in a deeply uncertain world. We always aim to provide practical information, even if we can't offer specific investment advice. This is the Definitely Uncertain podcast, and my name is Darren Rockman. I am a partner at Goldrock Capital, the 21-year-old multifamily office servicing high net worth families in Israel and around the world. And I am really pleased to welcome back onto the podcast my old friend, Dr. Zvi Schreiber. Hi, Zvi.
Hey, Darren.
For those of you who don't remember from last time, we had Zvi on probably about a year ago. Is a many-time entrepreneur in Israel. He has a host of successes behind him, and today he is the CEO of Freightos, which is, we'll talk a little bit more about what Freightos is a little later on. He's also the author of a number of books, most recently Money Going Out of Style, which was really topical when we spoke about it in 2021, pre all the crazy inflation, which has certainly made money go out of style. So Zvi, as usual, was ahead of the curve. So Zvi, we're going to talk a lot about inflation, supply chains, but in order to set the scene, you are the founder and head of Freightos, which is exactly in this area. Tell us a little bit about what Freightos is, what you do, and that'll help us move on to the other part of the podcast.
Sure. Well, down to make it simple, Freightos is like booking.com for goods. So if you want to book a flight, you go to booking.com, Kayak, or Skyscanner. If you want to ship a container by ocean or air cargo, you go to Freightos.com. And so people may not appreciate that this is a very large industry, obviously. A significant proportion of the world economy is global trade. About $20 trillion a year of goods are transported. And there's an industry of well over $1 trillion to transport those goods. And if you look at the labels on your clothes and your devices, you'll remind yourself that most of what you buy is imported. So this is a big part of our lifestyle, big part of our economy. Some of your listeners may be surprised to know that this whole industry is still mostly offline. We've started to change that. Some other people have started to change that. But still today, if you call up what's called a freight forwarder, which is like a sort of a sophisticated travel agent for goods in a way, and you ask to ship stuff, even on a major trade lane like China, US, or India, France, you'll often wait 2 or 3 days for a price quote. The price quote will typically be non-binding, subject to change. The transit time will be vague. So you've got this very big, very important industry still doing business to a large extent in 20th century style. And Freightos is the digital booking platform, which is starting to digitalize all of that.
This is for both water-based cargoes, so shipping, and also for air cargo, correct?
Correct. Take into account that very roughly by volume, 90% of goods are going by ocean, which is much cheaper, but much slower. But by value, I think over 30% of goods are going by air, because a lot of the more expensive stuff, whether it's jewelry or high fashion or iPhones, a lot of the more valuable stuff is going by air. Having said that, all kinds of goods go by air whenever the ocean supply chain fails us, and that's happening a lot at the moment. Then even regular fashion or toys may go by air because there just isn't time and ocean is delayed.
So that's a good segue into what we wanted to talk about, which is the disruptions that have happened around the supply chains. Let's just take a step back a couple of years and just talk through the story of what happened in 2020, what was the immediate impact of COVID, and how the sort of domino effect has spread to all the way till today.
Yeah. So in 2020 there was a virus which was doing the rounds.
Really? I barely remember it anymore. Something about putting cleaners up your nose and that type of thing.
Right. And the way the world responded to that was very different to how anyone predicted. Initially, of course, the stock markets crashed and there was a recession. Coming out of that, something happened which I don't know anyone who predicted this, which is that actually people spent record amounts of money in 2021 on goods, on imported goods, on goods in general. Retail broke all kinds of records. Of course, it was more e-commerce and less physical retail, but the total retail was breaking records. And the reason for that, of course, now we understand, is because people were spending less money on travel and less money on restaurants and other service. Yeah. And yet there was still plenty of money to go around because the economy survived fairly well, and the governments printed a lot of money to the point you made on inflation. And so people had about as much money as before, but they spent more of it on goods. Additionally, people were spending more time at home, so they bought more junk for their home. And this took everyone by surprise. In America, which is obviously the biggest economy, people were buying roughly 15% more than the pre-COVID record. Right. Now, the shipping network was not designed for that. Ships are expensive, cranes are expensive, trucks and trains are expensive. Nobody designed this network with 15% spare capacity, network which was normally growing 2 or 3% a year. And so in 2021, we got very significant bottlenecks and just backlogs where the ports couldn't cope, the trucks couldn't cope, the rail hubs couldn't cope. There was backlogs everywhere. So that was the main, and we still haven't fully recovered from that. Spending has eased a little, but we still haven't fully recovered from that.
And by backlogs, ships hanging outside of ports waiting to get a berth, goods sitting on docks, not being able to get unloaded and trucks stuck at the outside of major hubs, not be able to get their goods off the truck.
Exactly, all of the above. And yes, the most visible one, which everyone will remember, is at the peak, more than 100 ships hanging outside Long Beach. I was in Long Beach, and they did tactfully ask them to wait just beyond the horizon, so you didn't need a drone or a helicopter to see them. But there was well over 100 ships at one point. It's less now. But yes, backlogs at every other part of the network as well. So that was the most significant thing that happened. Now there have been other things as well. There's been weather, increasingly common weather disruptions. There's been lockdowns. Of course, COVID is still a huge issue in China. There have been lockdowns. There continue to be rolling lockdowns in China. And more recently, as the labor shortage takes hold, there's been a lot of labor disputes. Port of Oakland was shut down, and many other labor disputes.
And then, of course, we then had the Ukraine and some of the disruptions there, which also created all types of issues, as those ports, which are important hubs for wheat and obviously for the requirements to replace some of the natural gas coming out of Russia.
Yeah, absolutely. So that's right, to energy and food, but also actually an interesting disruption to air cargo from a couple of angles. First of all, there's a fairly significant air cargo called air bridge cargo, which is Russian, which got sanctioned in various ways and taking some capacity out of the air market. But also almost all the Western airlines can't fly over Russian airspace now. And suddenly the flight from, let's say, Europe to China. Is longer than it was, which of course reduces capacity because you can do fewer flights per week. And then, of course, the cost of the fuel and as well. So that's also been a significant factor, absolutely.
So what you're describing is a sort of a network that really was unable to handle what was being thrown at it, and it started to break apart in all different places, on sea, on rail, trucks, everything. How did that get reflected into freight costs? I know that at Freightos, you track these very carefully.
Yeah, that's right. Well, we not just track that, but we provide the indexes which everyone else uses to track it. So we publish every day the FBX, the Freightos Baltic Index, which is available on Bloomberg screens and the like.
And every so often on LinkedIn as well, like yesterday.
Yeah. And actually, an exciting thing since we last spoke is that the CME, the Chicago Mercantile Exchange, the world's biggest derivatives exchange, now trades futures on our index that we publish.
Wow. Nice.
So that's become a significant index or benchmark now with trading as well. We also publish the FAX index, the Freightos Air Index. So I think it's fair to say that we publish the leading indexes that everyone uses to track ocean prices and air prices. And yeah, ocean prices in their peak last year were 10 times pre-COVID level. So if I look at FBX01, which is the price of shipping a 40-foot container from China to the US West Coast, which is obviously perhaps the most important trade lane, certainly one of the most important. So that was $1,000 to $2,000 pre-COVID. It was fluctuating in that range. It peaked at about $20,000, believe it or not. Now it's eased back. I didn't look for a couple of days, but around $7,000 or so. So
still
we're about
significantly
3 times,
higher.
yes, about 3 times more than pre-COVID, 3 times less than the peak. Still significantly elevated, but also a lot less. Air has not been as volatile. Certainly those prices have gone up a bit with energy costs and other issues. But on the other hand, there's a lot of capacity, so a lot of flights are getting back in the air. Because remember that half of air cargo goes on passenger flights. So as passenger flights come back, there's more capacity.
So it doesn't happen that as passenger planes are empty, there's more room for cargo. It's actually the opposite?
Yes, it's the opposite. Now, having said that, you're right that in certain cases, airlines took the passenger plane and either put boxes,
chickens on the seats,
chickens, but they've strapped in boxes on the seats, or they actually took out the seats and converted it into a freighter. So there was a little bit of that, but that's quite an expensive thing. So overall, when passenger flights were cancelled, there was a lot less capacity for cargo overall.
And that reduction in price, is that effectively a reflection of the system being under less stress? Is it on the supply side that there are more trucks available, there are more ships available, or is it that demand is coming off? What is moving there?
On the ocean side, it's almost all demand. The supply of ocean capacity is fairly stable.
Fixed, yeah.
It takes a long time to build a new ship. So that's happening a little bit. Occasionally a new ship comes because people have been building new ships, which is also hard when the supply chains aren't working well. But they are trying to build new ships in Ukraine. So there's gradually a little bit of new capacity. But by far, what moves ocean pricing by most is the demand. And yes, demand has been easing a little bit.
Mm-hmm.
And also, ironically, of course, there was the big lockdown in Shanghai. So that reduces supply of goods, but actually reduces demand for shipping. So that actually gave the ports a little bit of time to catch up. It wasn't any help for the supply chains, but it was helpful for the shipping network.
And in the last couple of months, as the Fed has been signaling to the markets that they are getting much more serious about fighting inflation and effectively bringing on some form of slowdown, probably recession if we're not already there, that really the sort of driver of reduced demand, or is it that just the binge buying that happened in 2021 has now ended? Everybody's now spending their money on holidays, haircuts, and dog grooming, or whatever other services they're spending money on. Is there any way of passing those out?
You can pass them out because you can look at overall consumer spending versus spending on goods. I don't have those numbers at my fingertips, but I think it's definitely both. I think obviously the economy has slowed down a bit, and overall consumer spending is going to slow down a bit because of presumably because of inflation and interest rates, as you said, even though employment is still pretty full in the West. And yes, without a doubt, people are spending more money on services and getting out of the house more. So I think both, yeah.
And clearly having prices go from $20,000 a container down to $7,000, and that number is going down, is obviously reducing cost for producers, which is then going to probably reduce costs ultimately for the consumer.
Well, I never say anything is going down. It has gone down. That doesn't imply momentum. It's quite possible that you're right, but it could also go up. Who knows? But yes, that's a significant part of inflation when it comes to the goods part of the consumer price index. Shipping, it depends a lot on the good, but shipping can be anything from 3 to 20% of the price of imported products, and most products are imported in the West. So yes, the shipping price itself is a non-trivial component of inflation.
And I assume it's also, you mentioned earlier that a lot of juices actually moved from sea cargo onto air cargo, which is vastly more expensive. If your Levi Strauss jeans are now going on a ship rather than going plane, that also will have an impact.
Yeah, for sure. I don't think anyone is moving everything to air. There are some products, including, by the way, fast fashion, interestingly. Inditex Zara moves a lot of their stuff by air because they change it so quickly. So there's all kinds of things which go by air regularly. But for regular fashion or toys or other goods which aren't very high value, I don't think anybody's moving everything to air, but they do use air to compensate when their ship's stuck outside Long Beach and the shelf is empty. They will use it, and yes, that's very expensive, so that will be a factor as well.
And as the system starts to heal itself, obviously they're going to have to do that a lot less than they're having to do last year.
I assume so, but who knows if the system's going to heal itself? I mean, yes, we're getting past COVID probably, but like you said, there's this awful war in Ukraine, there's increasing weather issues, there's labor issues, COVID is still a big issue in China. There's still no shortage of disruptions, which is bad for the system. Honestly, it's good for Freightos because we're a digital booking platform, so when people need to switch around a lot, when things are stable and people can just create a long-term contract, then that's less good for us. But the world isn't working that way for all the reasons we said. People need the agility to switch around. And that's actually good for Freightos as a digital booking platform.
And speaking of Freightos, so how have you found the transition by all of the various stakeholders in the global freight business getting off pieces of paper and faxes and then moving on to a 21st century ocean?
Well, it was very slow and then it was very fast, if I can say it like that. If you look at air, which is further along that transition, it took a shockingly long time for any airlines to have an API, a digital connection for pricing and booking air cargo. We got the first API in 2018 from Lufthansa, and then we got 2 more in 2019. But even going into 2020, we only had 3 airline groups who had any kind of API, any kind of digital connection, which is really weird when you compare it to passenger, which started its electronic journey. I probably mentioned this last time, I can't remember, 1963. That's when American Airlines started Sabre, and you could do some kind of it. They didn't call it digital in those days, but you could, if you had a big enough IBM mainframe, you could actually book a passenger electronically in 1963.
You bought a $500,000 mainframe, and then you could save $2.
But if you were the world's biggest travel agent, then maybe you invested in that mainframe and you did that. So that was 1963. American Airlines gave us an API for cargo in this year, in 2022. So there was a bit of a lag between passenger and cargo. So that was weird how long that took. Having said that, since around 2020, 2021, as we got enough airlines. And then we got some of the big guys, Qatar and Turkish and Lufthansa and the IAG group, which is British Airways, Air France, KLM. So as those guys came along, the industry adopted a digital booking on our platform. Our platform is called Web Cargo by Freightos. They adopted at an amazing pace. It's grown easily 100x in the last 2 years, and it's growing at tens of % every quarter. So that's been, it took a lot of patience till that started. But when it did, it's been amazing to see that the industry can change quite quickly, especially when it's just choosing a flight and booking air cargo on a web page is just so much easier than phoning around the airlines. It's a no-brainer. And we don't charge the freight forwarders to use that, and they just adopted it really rapidly. We have now 3,500 forwarders. So that was exciting. Ocean is still taking, we're only this year starting to get ocean liners who are getting on board with any kind of digital strategy. One or two exceptions, but it's really only starting this year, next year. But okay, I think we knew when I started Freightos, I knew I was tackling a big conservative industry. I didn't realize, and like I said,
how conservative it really was.
Realize how long it would take. But there's a compensation, which is that once it's ready, once you get to this tipping point, it can go very quickly, which is great.
And another example of Corona accelerating digital transformation and bringing forward changes that were supposed to happen, should have happened, needed that catalyst.
Yeah, to some extent. I think it was happening anyway, because as we went into 2020, we already had 3 airline groups and a pipeline. So even before anyone had heard of COVID, we could see it was happening. So COVID gave it an extra push forward, but the time had come either way.
Okay. But by the way, considering the fact that my wife lost her suitcase and it took her 8 weeks to get it back, is there anything you're doing in the in the suitcase?
Yes, I travel with a trolley bag. Always.
So given the growth of Freightos, the sort of next step is that you filed or are filing to go public.
Yeah, so we signed a definitive business combination agreement with a SPAC, a blank check company called Gesher One, and now the next stage is we'll file a prospectus with the SEC, and we have committed capital. I know some SPACs have got a bad name potentially, but this is a SPAC which came with some very high quality long-term investors who committed to put in $80 million and committed to lock it up and leave that capital in. So in that respect, it's really a very high quality transaction, I think. And that's right. Now we need to file a prospectus with the SEC, discuss that with them back and forth for a few months. And as soon as they say that's ready, hopefully that merger will close and will be traded on NASDAQ.
And why now? Why is the time to go public now, considering markets have been dodgy? Is that the word? Or difficult
That's a word, yes.
Throughout this year? Yeah.
I think the reason was more to do with the timing for Freightos, not the markets. So markets are what they are. We're not going public to exit. We're going public to raise capital and to have a currency with which we can make more acquisitions. And if the market's low or high on the day that we start trading, that's really not relevant to the long-term rationale for going public. The long-term rationale for going public is as a better way to raise capital now and a better way to raise capital in the future. And because there's a lot of interest I think we've reached also predictable growth now. We got to a stage where we can actually predict, which you need when you're public. We can actually predict how fast our platform will grow. And I think what helps us a lot is the attention, this podcast being an example. There's a lot of interest in supply chains now. And so I don't need to spend as long as I used to. I still give the quick intro, but 3 or 4 years ago, I had to spend more time explaining to the average investor why this was even interesting. Yeah, so that's helpful. I think that the market wants to see solutions to this.
Fantastic. Best of luck with that, and I hope that
Thank you very much.
It's a huge hit. And thanks for giving us the insights into what's actually going on now, because obviously everybody's watching the inflation numbers. We're not quite clear. It's not clear to anybody where things are going, and freight is just such a huge part of that. So important.
Thanks, Darren.
It's terrific. Thank you very much. And thanks everybody for listening and watching. And there are more podcasts coming your way. Keep a lookout. Thanks. Bye-bye.